Hello everyone and welcome to Investing Angles. In today's market map, we have a big agenda. We'll discuss volatility, we'll discuss dollar index and yields. After that, we will move to major US indices and we'll have a look what's happening there, how they close today from the candles perspective and what they are charting from the Elliott Wave perspective. After that, we will discuss something about major US S&P 500 sectors. Later on, we will talk about major big stocks like Amazon, Microsoft, NVDA, and a few more. And also, we will share a Nasdaq roadmap. Once we finish with that, we will move into bonds and TLT in particular. We'll see whether today's move is substantial and might change anything. And we will finish our today's update with oil. Let's see what is happening there with the commodity. But before we move on, make sure to support us with your subscription and your likes. All right, so this is the volatility. This is the volatility candle map, and it is known to be the most reliable, I would say, reliable tool for volatility, for forecasting it. So what we are seeing right now is on the daily frame, the volatility index VIX formed a candle that could be a reversal. It could be a morning star type of candle. However, it would need a strong confirmation tomorrow. Other than that, it could be also a bearish continuation, which is like a thrusting line or something. Again, it needs a confirmation. If we look at the bigger chart, this is a 2-day frame closure today. What we are seeing here is that the trend flipped bearish, and there was a strong bearish continuation candle. So technically, the next 2 days are expected to be bearish. But it doesn't mean necessarily tomorrow will be bearish, but the day after tomorrow is likely to be bearish. All right, so that's the perspective from here. And from the weekly closure, we had a strong bearish engulfing on the weekly frame last Friday. And today and this week is expectedly the index is moving lower. So that's the perspective. The perspective short-term, mid-term is bearish right now, unless we see a strong signal for a reversal or a confirmation on the daily frame. So the chances, the probability is bearish. Let's move on to the next slide. So this is our projection. This is our projection on S&P 500, what we were talking about a week ago, potentially development a flag, and this is the flag target. So we are seeing that the index is moving towards the flag. So it might take a pause before moving higher, but it is what it is. Speaking about the dollar, it looks like dollar formed the bottom today, made a strong bullish engulfing of a previous hammer, and well, the chances for a move higher are substantial right now. How high, how far, we don't know, but the chances for a green candle tomorrow are fairly high. This is the 10-year yield, and it also formed a very bullish candle, and most likely it's a bottom, at least a short-term bottom. It climbed above the support line right now, and the chances for resuming the rally are fairly high. Well, that's probably not a good news for the TLT holders, but well, we'll discuss TLT later on in this session. Let's move on. So the next chart, this is the major US index ETFs, SPY, QQQ, DIA, IWM. What we are seeing here, so it's not exactly a bullish closure. However, we cannot call it bearish as well. So it's most likely somewhat neutral until we see a stronger move tomorrow. So these are potentially bearish reversal candles for SPY and Triple Q and DIA, but they need a confirmation tomorrow. So most likely tomorrow we will see an attempt to close the gap, which left open today, and we'll see from now on. So this is, for now, the trend is bullish, and we need a very strong move down in order to confirm a reversal here. So for IWM, it could be easier because it formed a bearish harami technically, and if it confirms the move tomorrow, well, it could be a reversal here. That's the perspective from candles. Let's have a look at the chart, at the Elliott Wave chart. What you're seeing here, the potentially very nicely formed impulse of the bottom, and a very sharp wave 2, 1, 2 here. So technically, the index could be forming right now wave 3, which has a target somewhere here at 64.30, 63.40. That's the potential target for wave 3. However, it's also a chance that this entire wave was wave 1, and we might see as a bigger pullback for wave 2, and I'm talking about this particular scenario. So this is, let's say this is wave 1, and this would be wave 2. However, it's not confirmed yet, and it's only a hypothesis. We need to see some strong confirmation. So far, technical indicators are supporting the notion that the wave 3 is underway. And if we look at the bigger picture that we shared a couple of days ago, this is potentially the last wave of an impulse that started in August 2024. So this is a very strong, substantial move, and well, it might come to an end very soon, in a couple of months, if this chart, if this path is followed. That's the perspective. Let's see how it unfolds. So far, wave 5, let's call it wave 5. It's a very strong formation. Let's move on and have a look at the sectors of S&P 500. So we cannot. Yesterday they were all bullish, and today we expectedly got a very nice result. The index went up. What is happening right now? So we are seeing that financial formed a bearish candle, and industrials also formed a bearish candle. However, it's kind of light bearish. It's needs a confirmation. This one too. So the first two need a confirmation, very strong one. Technology finally picked up the steam, and it looks like it's going to go higher with this candle. However, this big gap could be somewhat concerning, and we might see a pullback in order to close it. Consumer staples are clearly bearish, a strong, very strong bearish engulfing candle, and the chances, high probability for tomorrow move down. The same for utilities, and the same for energy. So these three are definitely going to be lower tomorrow. Somewhat uncertain is consumer discretionary. Cannot say for sure whether it's bullish or bearish. We need a confirmation for either way. And the healthcare is slowly moving up in a corrective fashion. Technically, this is a bullish this is a bearish engulfing. However, it's very soft and would require strong confirmation here. All right, so let's move on to the next one. This is our big stocks. So Microsoft made a strong bullish move and has a chance to explore higher highs. The same applies to Amazon. Surprisingly, Apple, after a big slide, it formed a fairly strong bullish candle. It's not entirely engulfing. It's a piercing line. If we have a green candle tomorrow, this could be a short-term bottom. And if Apple joins the rally for Microsoft and Nasdaq, or Microsoft, Amazon, and NVDA, well, that would be a powerful combo. Tesla, is moving down expectedly. Let's see how it closes the week. This will be very interesting. By the way, yesterday we posted late night. We posted a video about Tesla forecast, midterm forecast. If you're interested, you can have a look. Meta is uncertain, possibly a bearish reversal. The same for Google and the Netflix. Well, it returned into Bollinger Bands, and right now it will depend on the next couple of candles how this big red candle gonna be handled. So far, it is bearish, but well, depending on the next couple of days, it will be clear. And for Nasdaq, what we are seeing here, it's a very similar formation what we had for S&P 500. An impulse, however, it is smaller than for S&P. 1, 2, 3, 4, 5, and 1, 2, potentially 1, 2, very sharp wave. And now it is moving in an impulsive fashion upwards. I would, I'm still kind of concerned about this development, and we might see a possible wave 2 of a bigger scope. But well, so far we don't have any confirmation for this particular path. All right, so let's move on to the next subject. This is TLT. While we are moving, you can click a subscription button and make sure that you are always at the forefront of our news and spread the word around. Okay, so this is TLT, Elliott Wave chart. What we are seeing here is a potential for forming an impulse. It's going to be 1, 2, 3, 4, 5. I'm not particularly sure about this possible formation for wave 3, so it's somewhat complex. But nevertheless, it's possible here. It's possible. So if we have a pullback for wave 4 and a completion for wave 5, then we'll consider it as an impulse of the bottom. However, if the wave moves down and crosses this line, it will be an invalidation of an impulse, and we will consider it as a failure. And if we look at the candles, so far candles are kind of concerning, especially the daily one. Daily made a big bearish move, and technically it's a bearish setup for a move down. However, considering the recent moves on the 3-day frame, let's say we had this 2 nice green candles. We need to see a bigger momentum on the 2 and 3-day frames to see what kind of candle is developed. If we see a red candle tomorrow, then it's most likely a reversal. And from the weekly perspective, the week closed with bullish engulfing, and expectedly we had higher prices this week. But we are seeing that the candle was rejected at the resistance line, and right now is moving down. If it closes the week like this, it will likely resume the ride down. And if we look at the yields, what the yields are doing, so all of them closed today with bullish candles, and most likely formed a short-term bottom. If we have a green candle tomorrow, most likely it is a done deal, and yields are again moving higher. And what is interesting here is an imbalance between 2-year and 10-year yield. So 2-year yield is moving at a much higher speed, and this would have an impact on the spread, which we also monitor. So here is the spread, and this particular candle is a 5-day candle, which is closing tomorrow. If it closes like this, or technically it needs to be a little lower, it could be a reversal on at our top, and we might see a weekly closure also rather bearish if it closes like this. And this means that we might get a reversal and might get closer towards the zero line. So the inversion, it could happen again. All right, so that's all for bonds, TLT, and yields. And let's move to the final subject of our quick update is oil. So what we are seeing here is the candles. Candles are looking ugly. So for 12-hour frame, after 3 black crows, there were 2 attempts to negate it at least, and today we had another strong move down, negating that attempt. Technically, the oil is bearish here, oil is bearish here, but not strongly on the daily frame, and the 2-day frame today closed with a strong confirmation of a reversal, expecting oil to move down lower. 8-day frame also closed today with a very nasty hammer, which is if confirmed, it will be a reversal here too. And the weekly frame so far is striking bearish. There are still 2 days to revert this particular formation. Let's see what bulls can do. This is our chart that we outlined back in October, and this was, I think, the final December version, when we were expecting oil to move towards this target and then reverse here. So we have an impulse technically, and oil is moving right now down. And if we zoom in and have a look at the minor frame, what is happening here is the potential for a very large, very significant impulse here. So we have a fairly clear wave 1, wave 2, and wave 3 potentially complete. Wave 4, wave 5 is underway. There is a possibility, though, that this flag here is a midway flag, and it's kind of extension for wave 3. So wave 3 could finish somewhere down here. At least this particular scenario has technical support. Well, and but at the minimum level, oil, if it makes another lower low and goes a little lower, then it would complete an impulse, a big one. Well, and we know that impulses never go just one impulse. After consolidation, wave 2 or B, it will be another one in the same direction. Well, that's been all. That wraps up our quick update. If you like the content, just say so. Also, we are open to listening to what you say about the content. Please share your comments. Subscribe to our channel, share the word around, and happy trading, everyone.